Hey guys, Brian Stevens here with Mortgage Shots. I've got Fred Kreger, who is the president of the National Association of Mortgage Professionals, also known as NAMB. We're going to talk to him today about a couple of things that are affecting the industry, which is your job and my job. So here we go. First thing off, GSE reform. I saw something pretty interesting today. It was about these amicus briefings that are being put out on behalf of the investors who have preferred stock with the GSEs, and of course they want to see a recap and release so they can realize that money. These amicus briefings basically are third parties coming in and trying to influence the courts almost illegally, in some cases illegally. So there's a big push from investors to get their money out of this thing. Now GSE reform is coming up. Do you have any thoughts about how it's going to go? And are these investors with preferred stock ever going to realize any of that money?
Well, in terms of our position and even with our members, we need to see that the Fannie and Freddie remain healthy and remain stable, because obviously that has a lot to do with the liquidity in the market. No matter what, Brian, you know, the housing is always going to be part of the federal government, no matter what. Even if they decide that Congress, makes the decision, makes it private. Let's face it. There's a catastrophic event that happens in the financial industry, happens in housing. Guess what? Government will always have the backstop.
They have to.
That's no matter what. So what we want to see is to make sure that both entities stay within tact. One, that they're funded using the current any type of G fees that are being pushed, right? Is making sure that they remain stable and have everything to do with affordable housing. So really at the end of the day, we want to make sure that Fannie and Freddie are there. I mean, even with the channel, we want to make sure that there's no preferential treatment as well with Fannie and Freddie. So we want to make sure that whatever discounts, whatever pricing is available to larger institutions, larger investors, are the same as some of the smaller ones, because that creates that even playing field and doesn't basically distinguish one channel over the other, right? When you take a look at it.
Yeah, that was one of the big things I learned, was that the guarantee fee for a large institution could be different and lower than your G fee, which is going to stack the deck against a smaller lender. The other point is that I found interesting is that they're negotiating different underwriting. So they're getting different products with different underwriting guidelines, and of course they're going to be more lax for the big guys. So it kind of sounds to me that NAMB is doing a lot what the Mortgage Bankers Association has put out. Would that be a fair statement?
Very similar to what they are. We have a little couple more nuances to it. One of the things that we're taking a look at too is obviously with the evolution of technology. So think about this too, is that, we do have some institutions that still remain kind of the back dark days, but Fannie and Freddie, because of their competition, and you and I have talked about this before, when Fannie and Freddie are competing against each other, guess what? We have some really cool new technology and some new products. The unfortunate part is our regulator, even though FHFA right now is their overseer, well, think about the CFPB really is the regulator for this industry. And if they were to ever go privatized, guess what happens to the ATR and the qualified mortgage rule? It becomes institutionalized, right? And now it becomes, until 2022 or 2021, is now the qualified mortgage becomes part of Fannie Freddie. Well, oops, if that comes to fruition, what happens to that 50% debt to income ratio that Fannie now allows for, right? So there's some incongruency, with that.
Do you think a 50 back-end ratio is a good idea for somebody who's making $50,000 a year? Honestly,
something to make that comment, there has to be some other circumstances. I mean, let's face it. All the underwriting engines do, they measure risk. They measure everything having to do with that borrower. So that way, it's not. They take place of what the old loan committee does, right? The loan committee takes a look at, the core competency, looks at, the collateral, looks at, down payment, debts, credit. I mean, everything else. Sure. That's really what it does. So if a 50 back end works because everything else works, yes, I do absolutely agree. But if it doesn't work, it can't be that placeholder saying, okay, that's the only thing that you take a look at. Because again, at the end of the day, it's, when I even talk to my own borrower, I said, put myself in my position. I'm lending you my own personal $200,000, my own personal $300,000. I need to know you. Well, that's, again, I will allow 50% back-end ratio if I trust everything else about you.
Great point. Okay, I want to move on here. HR 2570, the Mortgage Fairness Act, put together by who was our congressperson who did this?
Congressman Posey out of Florida. So basically, what this allows us to do, obviously, is the elimination of any broker compensation that flows from a wholesaler to a mortgage broker in the points and fees test under the qualified mortgage rule. Because what we have seen over the last couple of years is that the underserved continue to be underserved by our members and by a lot of small mortgage brokers and mortgage companies that are in these small towns that have low loan limits. Because what happens, the only ones who can actually compete or actually do loans in those areas are your large depository institutions. Well, guess what? You now create an unlevel playing field and the competition doesn't prevail.
Yeah, so we're talking about the 3% point and fee cap. They're going to get rid of that, which is really going to help. I would assume everybody's on board with this.
Yes, absolutely.
Do we know where it's at? Is it in committee? Is it getting ready to pass the House? Where are we at with it? Do we know?
So right now it's in committee. We're at us, NAMB, actually put out a call to action to have all of our members start calling our Congress people to basically push it through and have some great momentum, bipartisan support, and even some of the other associations are coming on board. We've actually have calls out to them as well, and we're asking for letters of support so that way there's a comfort level of moving forward. I mean, even the CFPB has come out and saying, yes, we do agree with this, but we can't, under our authority, make that change and make that decision. They've been able to do it before, but they actually always agree with us that the compensation is already built into the interest rate, and technically it is double counted when you use it for that qualified mortgage rule.
Yeah, there's going to be some stupid nonprofit, some housing advocacy group that's going to come out against us, and it's just going to show how dumb they really are. You're going to see multiple ones of those. One more thing since we're on this. You are the National Association of Mortgage Brokers originally. I'm hearing that more people are going into wholesale. I'm seeing more lenders going into brokering. I'm seeing more bankers opening up their channels. Where do you see mortgage brokering in the next year or two? Try to make it quick.
So basically, I see that it's going to actually probably become more prevalent in some of the smaller areas and the niche products. And again, people are going back into the mortgage broker business because they see the availability of credit. And I think it has to, that balancing act of wholesale lenders coming back into the fold. And what does that do for the average mortgage broker? Well, it gives them a lot more opportunity. And again, kind of like the competing sources, the more people you have, the better products that you have. Faster underwriting, in terms of more wholesalers, and people actually able to have access to products. And really at the end of the day, where do you have the most access to products? And I think that's really what has to down to it.
Why are so many regional banks hesitant to take on and do any brokering outside of doing anything off their own lines? I mean, that's the biggest hesitancy. It's your regional banks who don't want to reach outside of what they're doing in-house and jump on and do some wholesale. Why do you think there's so much?
I think it's a level of risk. Everything has to do with risk. Everything, everybody's still scared. And I hate to say that. They're still scared about the CFPB. They're still scared about the regulator. And that's a shame. When you take a look at it, and that's being speculative. I can't go in the mindset of a CEO of a regional bank and understand what their decisions are. But I have to believe, you do have a lot of community banks that have gone out of the mortgage lending business. Why? Because it costs $9,000 a loan to produce. Well, when you basically tackle that in, that's my profitability margin is almost nil when I go after mortgages, and the risk associated with that and being audited by the CFPB, forget it. Why would I? Why would I get into that business?
I am starting to see more people moving in that direction. I think that's a healthy sign for housing as a whole. One more question here. So we've got a 3-month extension on our current national flood insurance policies, which is huge for what we have down in Florida. Even, Mississippi, Louisiana, which people aren't talking about, and of course, Houston, and extending our debt limit. Any thoughts on that?
So basically, obviously, Congress met this last week and extended everything to, I believe it's December 8th, which includes obviously the National Flood Insurance Program, the debt ceiling, and basically they did it right and basically gave emergency funds. They have to. Come on. They have to step up and actually provide, for the American people, and especially those that are devastated right now, because there's such devastation. I know there's so many associations, so many groups down there, and Congress had to step up. And so in terms of at least, yes, they kicked the can down the road, but they needed to, right? They can't basically be in debate over the next 30 days while people have catastrophic events happening in their communities alone, right? Well,
and here's the thing that nobody's really talking about right now is all signs are indicating that this is going to be a hot hurricane year. So we're looking at these two and saying, oh my God, thank God it's over. This might just be the beginning. So 3 months down the road, we might need that thing longer. I got a question here from Johnny Fowler from Hancock Mortgage. He's expressed a lot of concern about getting younger people into the business. I noticed you got a little bit of gray hair that you didn't have when I first knew you, and my hairline is like My hairline is like the 49ers offense in full retreat. What's NAMB doing to get more young people into the business?
So a lot of things, if you see every conference that we do, we have some level of integration into the millennial market. And I don't mean by just straight up millennials, but you do have a lot of companies, even my own company is actually trying to target brand new folks to come in. I mean, again, as we get older, yes, the average age of a loan officer now is in their 50s. How do you target this new generation or the new type of loan officer that's going to come into force? I mean, even when I started the business, even when you started the business, it's like, here's a 1003.
Right. But what are you doing about it?
So basically, we're having brand new programs. We're working with sales trainers to get them in. We're re-looking at how you pay them, because flat out, when people come in, they don't want to just get paid a commission and hope to close something. There's a type of brand new mentality. How do you train them? Basically gone are the days of, again, here's the 1003, learn it by the end of the day. No, you have to have videos. You have to have mentorship. I mean, you have to have folks that really truly understand, how am I going to learn fast enough and actually be promoted enough to actually keep me in the business. So obviously all the speakers that we're having, the relationships that we're creating with training facilities, sales training, not just technical training, but also sales training. Let's face it, in order to keep people in the business, to make sure that they're just not going online and thinking that the only way I can get a mortgage is online. No, you need advisors. And those are the people that we're trying to come up. It really has to do with one-on-one mentorship. No matter what, Brian, everything is still going to be at grassroots. There can't be anything institutionalized about our business. It's just not the way we grew up. That's not the way how we manage folks. And really, we need to actually take those folks on and really, truly, mentorship. Bob Sweeney, our education chair, had a great comment about basically, mentoring. It's so important for all of us to give back and actually mentor somebody coming in. So that's why we've been promoting this tremendously throughout the states, throughout the country, throughout every single event that we have, is basically bringing those folks on to mentor them. Basically, it is our responsibility, it is our duty to bring those folks in and to provide the tools and technology that's already available, and how they learn, how they train, to get them up and running.
One more thing, kind of in a similar breath there, Johnny also says, what are we doing about the appraiser shortage? I mean, this is bullshit. I mean, this is becoming epidemic level, right? I mean, in a lot of areas, the cost, the turn times, the quality, the age of your average appraiser, the fact that we have, appraisers that are flooding out, none that are coming in. We have a knee jerk on a national level to lower the standards. I mean, what is going on with appraisers right now?
So, when you take a look at what's going on internally with appraisal, obviously the Appraisal Institute is trying to, I would say, lower the standards, but normalize the standards. I'll call it that, right? Was that PC enough for you?
Sure.
Right, in terms of normalizing, because obviously they were extended far beyond sometimes the reaches. But it's the same issue that we had with loan originators coming to the business. If you basically make the standards so high enough and the cost to entry so high enough, no one's going to go into it. And, people can't remain complacent. I know.
Is NAMB working with the Appraisal Institute?
Absolutely.
Do you have any initiatives going on right now, to see some resolution to this? Because this is like a top 1, 2, or 3 issue with every loan officer I speak with. I mean, every single one of them. So what we want to see from our advocate groups is they're doing things about our largest grievances. This would be one of the big ones.
Well, we have one-on-one conversations with the Institute. We actually, gave comment and actually did a call to action to every single one of our members to give action to the Institute about how to normalize, the standard of entry. Even with our local chapters, we actually have appraisal groups coming in about how we can help them, how we can assist them. How can you actually go back even to the local colleges? Because face it, because you have to have some level of degree in education, going back into the small community colleges, going back into those folks and actually bringing them into the industry, showing what the industry. Again, it has to go back to grassroots. There is nothing institutionalized that you can say, hey, let's get 20,000 new appraisers into the system. This is how you institutionalize it. Unfortunately, it has to happen one at a time, which again, associations like NAMB, like our state, affiliates, it's the same thing. You have to basically be involved in your community. You have to give back. And how do you give back? You basically are pay attention to what's going on in your own community. Go back, after those folks that want to get into this industry. How do you do that? Through mentorship. I mean, that's really the only way we're going to move the needle forward. And I hate to say it, but it is one person at a time how we do this.
Yeah, what I would do is I would work with somebody like the Appraisal Institute and our local state chapters. And I would go to career days at like junior colleges, and say, hey, listen, man, you're going to walk out of here and make $30,000 a year, or you can make $300,000 a year doing this. Which one do you want? I mean, because appraisers are making a killing right now. I did the same thing with loan officers. Go to these career days at these JCs or even 4-year schools or tech schools. People are getting out of school with this massive debt. They had to have no idea what the hell they're going to do. Well, the real estate and lending community offers jobs with flexibility that are interesting, where you're your own boss and you can make a fortune in the process. I'd like to see those things happen from all of our advocate groups. Now, the one last point I want to ask you about is you have your national convention coming up in Vegas. Tell me a couple minutes about that.
Yeah, so basically it's coming up next month in October 14th and 15th at the Rio in Las Vegas. So people can sign up at NAMB.org. We have an incredible amount of speakers, including, actually, I was bringing up, basically someone who is going to, we talk about millennials, how do you socialize? How do you basically come up with your own brand? I think a lot of people don't understand that part, but in today's market too, how are you going to be successful in niches? And so we actually have a bunch of speakers actually talking about niche types of products. Because at the end of the day, it's funny, even when I speak to some larger groups, it's like, okay, you go to a network group and say, hey, I do Fannie, Freddie, 30-year fix. No, I mean, everybody does that. What's so special about you? I think that's what really people need to understand. And we're going to provide those, incredible tools. Plus, we have Lou Graham from Forwarder, singing as well. So can't have a bad time.
That, right?
And we have you.
And you have me. That's right. Now, how many people do you have registered for that right now?
So currently, right now, I know we have close to probably about 1,500 to 2,000 actual attendees registered. We don't count exhibitors or anybody else. We actually have people that are actually coming to attend. So we'll have a couple thousand people, if not more, attend our show. People are really excited about this one.
Well, which is interesting because it's going to be bigger than that mastermind or undermine or whatever they call that thing that they have over at the Palms. I think they had like 1,700 at this. And frankly, as far as I know, this will be one of the bigger events of the year. So folks looking at getting out and being able to, bump gums and talk with other people and see great speakers, NAMB is kind of shaping up to be one of the best events of the year, if not the best event of the year. The list of speakers, you can check it out by clicking the link down below. It's awesome. You can register also down below. This is going to be a great event. And I've seen the evolution of NAMB's events go up and up and up, and they're basically at the pinnacle right now. So if you're thinking about it, this is one you don't want to miss. With that said, Fred, let's chat again soon.
Sounds good. Thanks, Brian.
All right, thanks, Fred. Later.